Hello everyone, we are now live. You should be able to hear me. Okay, just a moment guys, sorry, just entering this trade. Okay, cool. Okay, so I've just sent that trade out to the members. This is a GJ long, GJ buy. So let me explain why I've just took this trade. We're looking at 3-1 on this, where I've just got in 199, 195. Actually, 184 is my entry. Okay. Excellent. I just need to do something, another thing. Okay, cool. So we're in slightly in profit now. Nice. Right, so going on to the daily time frame. If you remember on the last live, I spoke about the areas at which we could come down into and potentially find our feet. But more importantly, basically reverse from. So what we've ran into just now is this daily handle, this daily level of support. Okay, so that is the area that I've took the trade from. Why have I took a trade from there? Because it aligns within a 4-hour discount. So this 4-hour structure, we've got the low, the high, higher low, higher high. Prices come down into discount prices, and it's achieved that right there. Now the target for this trade, I'm just going for the bottom of that order block right there. So if I go to the 30-minute time frame, you're going to see that, which still gives us over a 3-1. So I'd be happy with that. That's why I've took the trade. I'm not expecting a new high, although it could do that. But you know, I'm going to be out of the market when we come to there, basically. So that could be a nice move. Obviously, it is Friday right now. It could roll over to the weekend. More than likely, it will, and we'll see what we do next week from there. But that's pretty much why I've took the trade. It's in a discount. It's reached a level of support, and it's done the entry model on the 30-minute. And then the target is right there. Okay. So just want to double check. Thank you, Peter, for confirming that. So that's the trade on pound yen. Let's look at the dollar. So the dollar is continuing to rise. We've just wicked above that high right there. We've got 23 minutes left of this 4-hour candle to close. If we close above here, then it's pretty much definitely going to go up there, I would say, although I've still got the bias of these higher prices, to be honest, regardless whether we close above this high right now on this candle or the next 4-hour candle or the one following that. It doesn't really matter. The important thing is we've printed 4-hour bullish structure on this, okay, which is aligned now with the external structure. So when we get internal structure aligning with external structure, that's when basically the lower time frame has reconfigured itself back in the direction of the higher time frame. So those highs could be vulnerable. As I've said, we could have a reaction from this 4-hour imbalance to the high. We've got a liquidity POI there as well. The 4-hour supply that basically took out that high right there, took out that high and then just dropped off the face of the earth. So the 1st of May there. 3 days of just bearishness. There wasn't a pullback. Then we started to print this bearish 4-hour structure. Had the low, higher high, broke that, higher low, secondary higher high. So all is well for the dollar at the moment. So let's see how it plays out next week. So that's pound yen we've gone over, pound dollar. We're beginning to take out these lows as anticipated, which is nice to see. On the daily time frame, very strong candle to the downside, as you can see. So we've been playing around in this range since the 16th of May. So if we just box this entire area off, it hasn't really done anything since then. So what it might be doing now, as we spoke about earlier on, it might be coming down into this, which would make sense from a higher time frame perspective. We'd have a daily pullback into there to then continue up. But we've gone through all of these already. What I did mention on the previous live session is we would go over silver and gold. So looking at silver from a weekly perspective, just take that off the weekly a moment. Excuse me. So first and foremost, actually, let's go back to the 12-month, so the yearly time frame. We've got yearly resistance right there that we've wicked into. Does it mean that this is now going to roll to the downside and start breaking these lows? Probably not. But what it potentially could mean is the fact that we could have a pullback, a temporary pullback before we continue higher, because obviously we've got 6 months and 18 days left of this yearly candle to close. So it still could easily just close above here. So the reason why I've got that on there is just for reference purposes only. On the monthly as well, we've ran into some sort of area right there. 2 bodies bringing it through. Okay, there as well. Sort of more significant in that one because we've got the 2 bodies. We've wicked through it. Prices had a meltdown from there. This was printed in 2013, and now we're seeing the same prices as we seen in 2013 on silver. Okay, so we haven't seen these prices since then, which is obviously 10 years ago, 11 years ago. But nonetheless, I do believe long term, the likes of gold and silver are going to go up in value. I do believe that. We've got the high there, right there at $49.80 per ounce of silver. That was the highest high of all time back in 2011. But what we've also done as well, as you can see here on the monthly time frame, I've aligned these bullish structure points that has been printed on the monthly, which is good to see. Obviously, if we've got the bias that, okay, silver could potentially be going up, the fact now that the monthly has confirmed bullish structure is good in that sense, because the previous month, so May, the month of May right there, that candle, you can see that closed above this high right there. Now that tells me that momentum is to the upside. Does it mean that we're just going to continue up like a rocket? No, it does not mean that. We could come down and continue with the reversals in terms of finding our feet at a lower area, we could do that. Speaking of which, what do we have within a discount? Let me just draw this on once more from the low to the high. You can see the 50% aligns right there. And we have a monthly imbalance within the discount. And also what I'm just noticing live with you guys is the fact that this 61.8% retracement level is on the yearly support. So let's go back to the yearly. All that is those candles right there. So a close and open on a yearly time frame. This was the close of 2021 and this was the open of 2022. Okay. So yeah, that's quite interesting that 61.8% aligns with that. If and when price decides to come down into there, I do believe that'll be a phenomenal place to start buying silver long term. Even from there to that high there, you're looking at a 39% return on investment if you were to get in there, which is pretty decent. If you were to just buy spot silver and just hold it. So where are we now on the weekly? So what I want to discuss on the weekly is the fact that we've ran into this weekly imbalance. Okay. But what we've also done is we've tapped into these weekly bodies, these tweezer tops. We've got the close of this week here, the open of that week there. Two bodies bringing it through. Price has just wicked into that fairly nicely, to be honest. It's just kissed it and moved away, as you can see. Does that mean that we can continue up? It could mean that from here. However, what I am looking at is the fact that we do have this weekly imbalance lower down, and also what we've just said about the yearly resistance potentially giving us a pullback. If I go down into, first of all, the daily, it's not too visible on the daily. I'm going to talk about the structure in a moment. But before I do that, we can see that we have sort of still remained within this daily imbalance. Even that wick to the downside, you can see that we didn't close below the imbalance, which to me still says that it could be still be valid, basically. So price could still want to move away from here. Oh, sorry, wrong chart. But what I wanted to discuss was the 4-hour bearish structure. So again, coming out of that yearly resistance, let me just mark that on the hourly so we can see that. So this is why coupling the higher time frame with the lower time frame can be very useful. And actually, look what we have there. The yearly resistance is going straight through that 4-hour imbalance right there. So that's pretty interesting as well. So coming out of the yearly resistance, we've got the high, the low, lower high, lower low, lower high, lower low. Very, very simple market structure on a 4-hour time frame. What I've got here as well, you can see I've got 30-minute structure. I've just got a horizontal line right there just to alert me when we do close above that, because I do believe this is going to be a nice area to look for buys into there, at least. So we'll have to see what we do with that. On the daily time frame, we've got that high right there as well, which could be used in the future. I'm just going to mark that on without making it too messy. Daily time frame, so 31.32, so $31.32 per ounce of silver, and then you've got the yearly resistance there at $39.91 per ounce of silver. So that's what we're looking at on this. Although momentum is still to the downside, I'm very much aware of that. I'm not blindsided to the fact that we're only in this imbalance, so I'm going to look for longs. I'm very aware of the fact that we're bearish on the 4-hour, and that we've got to, not necessarily we've got to actually, but we've got this area down here, what we just mentioned on the monthly. What we've mentioned on the monthly, and with the dollar being bullish, this could potentially bring silver down, because obviously silver is traded against the dollar. So it's silver against USD. This is what we're looking at. So if the dollar increases in value, it could bring silver down for that pullback before we get a continuation bullish. So that's pretty much what I'm looking at on silver. It is more of a long-term play. I'm very aware of that. But the technical analysis is the technical analysis. If we can find some decent areas to find within the market to hold this as an investment, I'm going to do that as well. So, you know, trading isn't just about day trading and getting into trades here, there, and everywhere. Because once we understand technical analysis, we can basically provide the same understanding and awareness to higher time frame areas and higher time frame narratives, and play the long-term game as well, with sort of holding trades and holding positions for months or years to come. Okay, so that's silver. I hope that made sense. If you do have any questions, please put them in the Discord group. That's what it's there for. That's what we're here to do as well, to help our members. So let's move on to gold. So on gold, if we just go to the 12-month, just briefly, obviously we're bullish, heavily bullish. Monthly, same story. We've got monthly structure there as well, similar to what we've done on silver. Low, high, higher, low, higher, high. Low, high, higher, low, higher, high. Okay. Price isn't always just going to skyrocket to the upside. There is going to be periods of time where the market wants to breathe and come down and take a breather and reset and gather more orders, whatever phrase you want to label that as, basically have a pullback. So with that in mind, what I've got marked on there is this monthly area, these two bodies right there. I'm not saying that can specifically be reached, although it could do, but I'm just aligning that on there because it is two monthly bodies within a discount of that leg to the upside. And what I'm going to do, I'm going to update this because I've just put a 61.8% on there. Again, aligning with the 61.8% right there. Okay, so that's the monthly. Weekly, let me just make that visible on the weekly as well. Okay, cool. So similar to that as well. That's very interesting. So what we've got there, we've got a weekly excuse me, we've got a weekly imbalance right there within discount prices. Number one. Number two, we've got 61.8%, and number three, we've got that monthly support right there, that red line. So we've sort of got three confluences as to why price could be dragged down into there. So the top of that imbalance is the price of 2,079, okay, and 53 cents. So that's that. What I do like about this as well, in terms of a bearish standpoint, I mean, I know we are bullish overall, but in terms of the bearish narrative or idea, is the fact that we've closed below that low right there. So these are the bodies. So that's the closure of this week, then the open. So two bodies next to each other, we've closed below. So this to me says that the momentum could be starting to shift to the downside. Not only that, the fact that we've obviously made that high, came back down into this weekly imbalance, and yes, I'm also aware of the fact that we are still within this weekly imbalance. Price has come up, swiftly moved back to the downside, and we've closed below there. So you could even call that a bearish change of character, or again, whatever terminology you do use. It doesn't really matter. It's more the fact that it has happened. If we go to the daily, you can see that, and it's even more clear on the 4 hour, which I'll discuss in a moment, but you can see that we've come into premium prices, achieved the daily imbalance, had a huge move to the downside. This was last Friday. So that was a 1,000 pip move. Okay, a 1,000 pip move. So if we go to the 4 hour, or was it 100 pips? Pretty sure it's 100 pips. Let me just have a look. Yeah, that was 100 pips. Okay. Off of that daily area. Again, so the 4 hour time frame, very, very clear to see what's happening right now. So this was the first retest, if you like, of this weekly imbalance. So let's just pretend all of this isn't here a moment. So let's just replay this. This was the first retest of this weekly imbalance, and then what price did was it started to print 4 hour bullish structure. So you can see all of the red dots that I've got labeled on this chart. That's the 4 hour structure point. So we've got the low, the high came into discount, higher high came into discount, higher high. Did what? Break. It broke that low right there. You can see 4 hour break with the candle body closure, and then we made the low, achieved premium. What do we have within a premium? Daily imbalance. Price moved away beautifully from that, made another lower low. So it made a secondary lower low. This was the first, this is the second. So where we are now is we're now playing within this range. So this is the 4 hour bearish range. So from the high down into the low. Okay, what do we have within premium? You can see right there, 4 hour imbalance. If we go to the daily, there isn't really anything on the daily. That's too big of an area for myself. So 4 hour, we've got that, very nice. We've got 4 hour supply there as well. If we did want to creep up higher and tap into that candle, that's fine. But that's what I am looking for, is come into here and potentially move away to the downside. What I want to look at is the extension alignments. Do we have anything aligning with these extensions? So let's go to the daily. I just wanted to make sure this is visible on the daily. Yes. So on the daily, we've got that wick there. Just want to go on the 4 hour a moment. It's a very prominent area. Spike into the high. Okay. 2,222. So 4 twos right there. Prominent high, spiked into that, came down, blast through. And now we've got a 61.8% alignment at that area, which is quite interesting. So we'll see what happens. That's what I'm looking at on gold. Isn't really much else to discuss. I'm not going to go into the lower time frames because, in my opinion, that's a bit pointless because I've got the higher time frame areas on there. I'm not going to start chasing the analysis and chasing the lower time frame market structure because that could be everywhere. I'm not going to confuse myself. That's the big lesson for anyone to take away. Any beginner trader is obviously go from the higher time frame downwards step by step, rather than looking straight at the intraday time frames. You know, where's price going in the next 2 minutes, 5 minutes, 10 minutes? Who actually cares? Because you want to be looking at the higher time frames to begin with, and then scoping down. So that wraps this live session up. I just want to say thank you for everyone that tuned in, and as always, please feel free to put your questions in the Discord group. Once more, that's what it's there for. That's what we're here for, to help you guys in your journey to learning how to trade. I hope this was valuable. There's many gems within the live sessions that we do. So really, it's just down to yourselves to take note and to apply what you've learned, basically. So thank you once again. Obviously, it's Friday, so we'll catch up on Monday, where we'll be going over the usual pairs and all of that good stuff. And we'll also catch up on GJ as well, how that trade does. So it is in profit right now, which is very nice. So hopefully we can get the TP on that. But yeah, like I said, we'll catch up on that. Transparency is the goal here. We're not trying to hide anything, trying to be any, sort of doing things the wrong way, basically. We are doing things the correct way. We've got nothing to hide. Everything here is what we're actually doing and what we're actually trading as well. Remember, these are the trades that we actually take. So that's pretty much it. Thank you for watching, and I will see you next week. Take care, guys. Cheers.